morning.
Good
How
morning.
is everybody?
Good morning.
So, we have a special guest host today, Mr. Bob, the Boltman, New Jersey, part-time Florida. So,
Morning, all.
good morning. We're going to mix it up a little bit today. I'm going to start off. The weather here is freezing. Uh,
Same
so,
here.
is it? A big cold front came through yesterday morning, and man, it got chilly. But
36 in New Jersey.
holy shit,
Yeah,
that's not
yeah.
spring.
Not cool.
No.
It's cool,
So
but it's not cool.
it's cool, but it's not cool. It's not Fonzie cool, right?
Yeah.
What?
34.
You're like Antarctica. Wherever you live is Antarctica, you know? All right, well, let's get going here. Let me share my screen.
I'm happy to be filling in for Mark, but I won't be doing his functions.
Okay.
So
Okay. Approach
yours
it a little.
truly, right there, Trent, will be doing his functions and others.
Exactly. Well, we're going to make a little bit
Well,
of a mix up today. It'll be
Bob will
good.
help you out. Do not buy above or below the Bollinger Band. You
Um,
should buy inside of the Bollinger Band.
what are Bolger bands?
Right now, I have a Bollinger Band around my stomach, but hey. Uh, all right. Well, let's get rocking here. Friday, we closed out the market up on the S&P 1.2%. Dow Jones up 0.78%, and the Nasdaq was up 1.52%. Year to date, we're actually in the positive on all three indexes. Finally, year to date on the S&P is up 3.6, Dow Jones 1.26, and the Nasdaq 4.2. But that may be short-lived because futures are down on all three, roughly 0.5%, or roughly 50 or 45 to 55 basis points, which in today's terms isn't humongous, but what it tells us is a little bit that this over the weekend events geopolitically, there is no solution to this Iran-Israel U.S. war that's going on. So as we can see in the headlines over here, stock futures decline as Iranian war tensions escalate. And I think that should be the underlying geopolitical theme for probably quite a while. Bob may touch on the reorganization of the world order here in a minute. We'll see. But heat map wise on Friday, pretty much what we would think would lead the market led the market. And that was NVIDIA, Apple, Broadcom, and pretty much that whole technology AI sector, Google, Microsoft a little bit, Meta as well. But I want to point out the worst performing sector in on Friday was energy. Energy's led this market through March, and everything else basically sucked wind. And now energy is rotating to the negative side. So when I look at it from a standpoint of sector performance, if you let's go back to January, we can see that energy here, XLE here, was up 14% in January, February up 9.6, March 9.6, but down 10.2% so far this month. But when we go back to January on the tech side, so AI particularly, negative basically 10 basis points, negative 3.6 in February, and negative 4.2 in March. But so far this April, we're seeing it's up 16.1. So sectors that were performing negatively, so like consumer discretion, negative pretty much for the first part of the year, then April up 10.2%. Consumer services up 7.4 so far. So we're seeing this rotation from beaten down sectors to money moving out of those or moving into those sectors this month. So if I'm looking at March, March was that big sell-off month, and it sort of built into it from January and February. Now we're getting a bit of a rebound. So far, tech is leading the way. So the question then becomes, is this a true recovery in the market or not? And so over the weekend, I was thinking about this whole liquidity situation. I've talked about it quite a bit, and the supply and demand, accumulation and distribution. And I remembered long ago when I was studying for my CMT exam that I never took because it was just so freaking overwhelming. It was the Wycliffe theory, which was designed by Richard Wycliffe. He was born in 1873, and he started on Wall Street at the age of 15 as a runner. He built his own brokerage firm and ran a magazine back then called the Magazine of Wall Street. And what his whole theory was a study of what the big boys did. So J.P. Morgan back in this case, and Jesse Livermore. If you're not familiar with Jesse Livermore, look him up. He has been blamed for the the Great Depression, not the Great Depression, but the great stock market crash that we saw back in that time because of his shorting of this market. He got so big, he basically was blamed for moving the market negatively. So Richard Wycliffe studied the behavior of these big institutions, and he came up with a approach to how to identify markets. And it's based on 3 laws. Law of supply and demand. Prices rise when demand exceeds supply, and prices fall when supply overwhelms demand. Simple, eternal. Second law of cause and effect. Big moves require big preparation time. The longer and wider the base, the larger the eventual move. So I'll show this here in a second. But this we've talked about in particular NVIDIA. We've seen that sideways movement since September. And so this long drawn out accumulation or distribution phase, we don't know yet, but we'll see. And then law of effort and results. Watch volume versus price action closely. Divergence between effort and results signal a trend change. So when we see an accumulation phase, it looks something like this. We all probably can relate to this at some level as we're looking at charts. And you have it at phase A, which is a selling climax. Market comes down, it sells off pretty hard. Phase B is in this area, and this is a building the cause. They basically accumulate in this phase. And then phase C, this is something that we witnessed last week. And that is the spring phase. This is when the market sells off a bit, real hard below previous phases, and then makes a move higher. And then phase D here, this is that last point of support. Hits resistance here at the top that we saw back here. And then phase E, this is where things break out and markets go higher. Now, it's the opposite on the distribution side. And we can look at charts and the market it's gone up, and this probably looks very familiar to a lot of us. And that phase A is when your buying climax happens. This is when markets got hyped up, let's say July through October of last year. And then it starts to basically go through a distribution phase. They, instead of buying 2 and selling 1, they're buying 1 and selling 2 at this point in here. You get a bit of a fake out, so a break above, give you hope. This brings in the retail investor in phase D or C, and then it starts selling off again into phase D here. And this is the last point of supply. Basically, the big institutions have exited the trade or the investment at this point on a long-term basis. And then phase E is this breakdown. So when we look at this, there are 5 principles that he used, and that was determining the trend, aligning with the stocks that will profit from the trend, find the cause. What is the cause that's causing this market to go higher or lower? Confirm the readiness, and then time with the market. Don't try to, front run the market. Let the market tell you when to get in. And these were his 5 principles. And when you look at markets and how they behave today, you'll notice a lot of what he's talking about is true today as it was back then. So here we are today. This is the S&P 500. This is a chart as of Friday. And so in March, we had a big selling climax. We'll go back here to July of last year. We had a big accumulation phase, see the sideways movement. And then it broke out and moved higher, another little bit of accumulation, a move higher, accumulation. And then we went through a distribution phase. And this, what you look here, it hit these resistance level. Mark points out 1, 2, 3 times, and then it pulled back and sold off. And basically found support where support was in July of 24, and has basically broke down a little bit and came down to the support level and then started accumulate again. And that's where we got that run July of 25. So this is 24. This is July of 25. June, July of 25. This is where we market bottomed out. And then we moved higher. Well, since October, we've been in this distribution phase. We've challenged these areas, as we could see up here, and then we failed. Well, this is where, when it fails, you see this pullback, sizable pullback beyond this square here, or this rectangle. And then we had a move up. In the last 3 weeks, we've seen that move up. Now, this question is, are we in accumulation or are we in a fake out? And so when we look at this, the question is, went into the weekend, we have a geopolitical event or a war basically going on. And the question is, if we hold above this level that we have, that has been resistance, this could be a continuation of accumulation and a move higher. Bullish case for the S&P. If we can break above 7,200, we're going to enter another phase higher, which would take us to about 7,500. And all the talking heads on CNBC have been all talking about 7,500 to 7,600. And when I started looking at this, I was like, do they know something? Do they see this as the accumulation phase and that we are going to get some sort of resolution with the Iran war? And is something else could be a positive event that would drive the S&P higher? Now, that is very possible. On a bearish case, we could see a breakdown below 6,900, and that's where that distribution phase will continue, and we'll see the market pull back. So as he pointed out, don't fight the composite man. Find where the smart money is buying or selling and trade with them. And I think that's something that we all sort of get caught up in. I know more than they do. In this case, we don't. So let's let them lead the way and follow them through. So I wanted to hit upon the VIX and a couple of other charts, but also look at the Mag 7 and a couple of Mark's swing trading ideas today and look at it from an accumulation and distribution kind of thing. Today, we are back into the chop bucket on the VIX. We basically saw a pullback over the last 3 weeks in the VIX, and we got into the investable bucket. We got that hope phase going on, right? End of our last week. But we're now breaking into the chop bucket again because of this war we got going on, and a deal wasn't made. We acquired a ship or took over a ship by Iran. So we're now in that chop bucket. And so we're in this phase of what's going to happen, where are we going to go with the market. I've talked about the US dollar versus SPX, the S&P 500. When the dollar falls, the S&P 500 goes higher. When the dollar strengthens, the S&P falls. And today, the market looks to open but just right around where it closed out Friday at with the dollar. And what I see here is possible building accumulation here in US dollars, and we could see a breakout. This extension that we see in the S&P, we had this big gap up, and this was a 2% plus gap. Historically, when you see this and it broke through the 200 and the 50, Okay, so it broke above the 200 and the 50 and gapped up over 2%. Those three ingredients in one day, historically 100% of the time, it will retrace and fill that gap. So as I'm looking at the US dollar potentially strengthening, I anticipate this event where filling this gap could easily happen. And that would bring the this is SPY. It could bring us back down to 660 versus the 710 where we closed out on Friday. So keep an eye on that. When we look at Apple as an example, we've been through, goes back to May of last year, accumulated through August. We broke out and we've moved higher. And then we got into first of the year and we've gone through a distribution phase and the market has pulled back. But we're looking, if you look at Apple, and I know Apple hasn't come up with an incredible product here recently or anything like that, but we may be seeing a more of an accumulation phase in Apple. But what we need to see is this breakout above where resistance has been back here in November through February and through this year. So possibly a breakout above 280 would be a phase of an extension or a move higher, a positive bull move on Apple. But right now, it looks to me we're in a bit of a decision-making phase when I look at this. Your RSI is at 65. So we're closing in on a overbought Apple position. So keep an eye on that on Apple. Microsoft, you go back to September and you have accumulation and then a failure in November and then distribution all the way down. And if you were shorting this, you made a ton of money shorting this stock from the first of the year through here at the beginning of April. Now we're in this accumulation phase. We've broken out. We're now hitting resistance that we saw back here in May, or what became the move higher in May. And now we're seeing a resistance level. If we can break through this level, we potentially can go higher. But remember, these distribution phases where it looks like support here now become resistance. And so keep an eye on that as we proceed forward through this phase. I look at the geopolitical side of things. I look at the economic side of things, and it tells me this may be a head fake so far, but we may have 2 more weeks of it. Meta, big distribution phase at the beginning of July through October. Market went down. Another distribution phase all the way until through March, until the first of the month. Now we're in that sort of spring higher potential, but we're up against that resistance level. What was support back in July through October and through December through March is now resistance to Meta. So if it can break through this, you may see a breakthrough, an accumulation, and move higher. But what's going to cause it to go higher is the question. Is there enough positive things in the world that will cause Meta to go back towards $800 a share? It's a wait and see. But what I'm seeing here is the institutions have been selling this thing off, and I would not be surprised if they continue to do so as we go into May and June. Tesla accumulated through April, through September, made a move higher, but then has just been selling off. When you don't see that a distribution, it means that institutions are basically not 100% one direction or another. And you're just saying basically a floating downward. But if you go back to where we were in May and April, what was resistance is now become support here as the first of the month. Now we're up against some resistance levels. So these are, areas of support and resistance. What I want to see is that accumulation for these stocks to go higher, or a continued distribution for them to go lower. Google, nice run since July of 25. up, accumulation, move higher, accumulation, move higher, accumulation, and move higher. And then we went through a distribution phase starting at the first of the year. Markets went down, accelerated that selling into the first of the month. Now we're bouncing back. So now it's a question of, does this become a continuation of accumulation? So we hit this top part, we'd pull back, find support, move higher, challenge again, accumulate, accumulate. And as Wycliffe points out, the longer the accumulation, the stronger the move higher.
Trent, if you take these charts and you overlay them, you're going to see the same pattern. Overlay
Yes.
them with other companies like Meta, the rest of these companies, I'm seeing the same pattern.
Yeah, it's 100%. 100%. So it's a question of, what are the institutions going to do? When I look at NVIDIA, I go back to August, sideways, move higher, punch through, found support. It's found support. We had an accelerated selling here. Oh, let me go back. Accelerating selling into the end of March. And that was that bottom half of pullback. That's that spring. And then we got this spring higher. But the question now is, are we going to be able to break 200, 210 range? And the way the market's playing this morning, it's questionable, very questionable. So we could be in a distribution phase with NVIDIA, or we could be in accumulation. Just let the market tell you what to do. But what I see is we have a very overbought place, according to the RSI, we're very overbought. And with chances are we will see a pullback, but where is it going to find support? And if it doesn't find support, then we're definitely going to enter a distribution phase, which could bring us back down to where we were around 150, between 130 and 150, which would be a better buying opportunity. CoreWeave's been a talk on Kerry's call on Friday. You can see it, accumulation. And understand, they became public in April, I believe, or March of last year. So they went through an accumulation phase, took off, and then they went through a distribution phase. And now it looks to be in an accumulation phase. The key is, will it continue to support and build higher and make a move higher? And where is the resistance level it's going to run into? Probably around 160 if it does continue. But this could be an opportunity. But remember, we're very overbought now. So we would want a pullback to get to more of a neutral, basically even, overbought, oversold, which is around 50 on the RSI, and then a move higher for growth. So could CoreWeave be a great opportunity in the near future? We'll see. All right, let me get out of this and show Mark's swing trades here real quick.
Heavy debt.
Huh?
Heavy debt, CoreWeave.
Well, and that's the thing I think we need to think about is, what is the fundamentals? This is where, you see the accumulation distribution. We're at the top of the heap on a lot of these stocks.
Mm-hmm.
But now, what is the fundamentals? What is the fundamental environment we're in? And I think that is the really telling part. CoreWeave is just, in my opinion, heavily overfinanced and paying a lot of money to finance that debt.
Oh,
and
yeah.
that could be the pain in its side overall. So we went through NVIDIA.
You gotta have double the income. You have to have double the income to finance that.
Yeah.
So
I mean,
on a normal basis, if you needed $1 million, you need $2 million to finance it.
Right. And they're not
I'll
talking
say in
millions.
revenue.
Yeah. Well, and that's the thing is, are they going to able to continue that? And with CoreWeave, Microsoft's their biggest customer right now. If they can meet those expectations that in the contract, then yeah, maybe CoreWeave can make that happen, refinance debt, and get into more of a positive earnings environment. Or are they going to fail on that delivery? And if they fail on that delivery, CoreWeave's done.
The problem is that banks don't want to lend them money because there's too much risk,
Yeah.
So they're not going to get conventional financing. So that's a big problem for them. And now they got to pay 10, 15% for their money, maybe more, depending on where they're getting it from. Uh,
right?
that'll kill you.
Yeah. Well, and I think that's the thing in this phase we're in. You've got to look at those fundamental debt to equity ratios. If they're
Right.
really over their skis, you end up on your face. And I think that's where you're seeing some value oriented companies coming into play, because they aren't littered with debt, or they're not exposed to the private equity or private credit world as such. So one
Well,
of
if they're
the
as strong, I'm sorry,
Go
if they're
ahead.
as strong as, a Meta or these other companies, that they have a basis of standard revenue
Hmm.
streams, they can finance off the balance sheet. This guy can't.
Yeah. Yeah, he's cashing credit cards right now.
Right.
Uh, that's my concern. Um, so this is Arthur J. Gallagher Company, AJG. This is on Mark's swing trading list. As we can see, just applying the accumulation distribution, you see distribution back in from March of last year all the way
Mhm.
through to here recently in February. And we've basically been going sideways. So we can see this as a potential accumulation phase. Your RSI sits at 56 right now. Looks to open up at 221.90. My yellow line here is my intermediate trend line, the 62 period moving average, in this case daily. So we could see we can look at this from a point of view of accumulation since February, up, down, and now we could see a potential breakout. So this could be a great opportunity from a swing trading standpoint. But take into account, we got resistance probably at 242, which is roughly 22, $23 higher. If we can break through that, your next sort of line in the sand would be 267. So this could be a really great trade. But what we want is a breakout above, in my opinion, the 62 here. But we want to see that acceleration volume. We want to see volume push this because we want commitment by the institutions, by money flow to come into this. So this could be a really good opportunity. And remember, swing trades aren't day trades. Swing trades can last a day or they could last a month. And in my opinion, when I look at this chart, I see this move going back to January of 24, move higher, accumulation, move higher, accumulation, move higher, and then a distribution. And we've distributed 3, 4 times now. And now we're at this point where we could be at a fair value price, and the institutions are accumulating here, and we could see a pop higher and move higher. And if we can break through some of these resistance levels, this could be a really awesome trade over the next, in my opinion, 15 to 62 days. MasterCard MA, this is another one Mark was pointing out. Went through distribution, accumulation, distribution, accumulation. But now it's more of a trying to figure out where this is. And remember, credit cards are, MasterCard and Visa, from a longer term point of view, are dependent on you and I paying our bills. So from a fundamental side, we got to keep an eye on that. And one of the things you can look at on the reports or the earnings reports from MasterCard, Visa, any of the banks, is their non-accruing debt. Okay, this is debt, loans or credit card loans that are no longer counting on the interest being paid, because these guys are 90 days out or more. And I'm working on a report on some of the major banks and looking for actual like big accelerations in non-accruing loans, because that's an indication of a breakdown in the banking system. And right now, a lot of them aren't really showing much pain at this point. Now they could be hiding it because they're refinancing it in some way or doing some funny math. But right now we're not in that world is ending phase with the banking system. So when we look at MasterCard, we've been in this just downside move going sideways. Now we're above the 62 and looks to open a couple bucks lower today. But if we can hold above this resistance support, or what has been support and now is resistance, and make a move higher, we could see a move, a nice swing trade in MasterCard. You see the RSI is at 62. If we stay above 50, this could be a nice setup for a run over the next couple of days, if not weeks. It's the same with Visa. They almost look identical. Here we had some heavy buying on Friday, so that's a potential opportunity, a potential setup. But remember, we got some resistance. What was support are now resistance levels, so keep those in mind as we get into that. Norfolk Southern Corporation, another swing trade idea by Mark. We've gone through accumulation, a pop higher at the 1st of February, and then went sideways, and then went through a distribution phase. We had that big extension down, big volume here. We can see that here. And market basically it had some exhaustive selling, and now we're moving higher. And this could be a nice setup. We just got to get through some resistance levels that were set back here in October, back in December, and right here in March. If we can break through that and move higher, we could have a nice extension there. Keep an eye on that RSI as well. Keep an eye on buying volume. Disney is another one. Big distribution phase over the last basically year. Since July, big distribution phase, but we're breaking above this intermediate trend line here. Big exhaustive selling from the last week in March into the 1st of April, and now we're moving higher. So we could see a nice extension higher, probably a pullback. Looks like it's going to be down 75 cents today, but possible support here in May, here in November, as well as in February. If we can break through that, we could see a move higher on a swing trade up towards 115. We break through that, we get into the 120 mark, and that would be really nice trade on a, say, less than 62-day period. Fox Corporation, another one that Mark came up with. Big accumulation, big extension into January, and then distribution all the way down. Big selling. We can see that here in this volume. But since then, since February, 1st of February, first week in February or February 12th, we've basically been going sideways. And so you just a small accumulation phase, big extension down here on February 25th, but we popped up and accumulated. Now we're popping higher. So if we can break through this level right here around 65, 66, we can move higher and potentially hit another resistance level at 70. We break through that, then, $75, $80 a share. So potential opportunity. But keep in mind, your RSI is very overvalued at this point. So anticipate a bit of a pullback and look for that support right around 63. This could be a nice spring higher on a swing trade. And then BX, Blackstone, accumulation back at the 1st of a year ago, accumulation back through July, pop higher, but sort of fizzled out in September, and then it just went through a big distribution phase. When I look at this, I go, we were talking about private credit a year ago, but we didn't really heat up on the private credit conversation until the first year. When I look at this and understand Blackstone's one of those private credit, companies, institutions were selling off that. What did they know that we really weren't paying an enormous amount of attention to? And my feeling is they've seen this coming, but now they're in more of an accumulation phase potentially. We are overbought on the RSI. Volume has been very much more abnormal than since February. Selling off, possibly accumulation here, move higher. We'll see a pullback. If we can hold this support level right around 125, let's just say 120 to 125, we could see an extension higher going in. really, their earnings, they come out with earnings on Thursday of this week, actually. So that could be, and as Mark has always said, he doesn't buy into earnings because you can get your face ripped off. It really comes down to guidance. And I think that's, Bob's a big advocate for listening to the calls, earnings calls, because they give you an enormous amount of insight. So this is one that on a short-term basis could be a nice swing potential pop into Thursday, but just be careful there as well. All right, that's what I got. Hopefully I dropped some knowledge there and helped you out. Bob, you got some input, ideas.
I got some
Love to hear it.
Today I wanted to talk about the change in world order. It's a little political, but not only political, it affects the markets. And um, what's happening in Iran is basically Iran is playing on market. You may not see it, but it's actually happening behind the scenes. They're not selling their oil, so they're having trouble moving their oil to other countries so they can support their war. So what's starting to happen is they're starting to control the market. They open the Straits of Hormuz, everything is cool. Then over the weekend it falls apart, driving the markets down. They're short playing the markets in other countries against our country. And what's starting to happen here is they're making money in the markets. There are heavy leveraged numbers on buying in the market. So what you're seeing is a play between the two governments. Then you got Trump. He's coming in saying, "Oh yeah, we're coming to an agreement and everything is great," and the market flies up and everybody's happy. We're going to get out of this thing. The truth is, it doesn't seem to be happening, and it's affecting uh, the normacy of the market. It's not normal. Okay, what you see happening here is not a normal market. This is a controlled market going on right now, and it's really you can't depend on what's going to happen tomorrow. And what you have also is a change in world order. Trump is trying to change things to where world order comes back to the USA. So in other words, you want oil, you're coming to us to buy it. You're not going to Iran. So what does that do? That controls China. Okay. And by controlling China, we're controlling the market. And that's basically what we're starting to see is happening here, and it continues. That everything I'm talking about is basically what you're seeing in the market today, why it's down. Because Iran says, oh, there's no deal. And US blows up one of their ships. Okay. This is something that we need to expect to go on for a while now as our administration changes world order and how other countries are going to come to us to buy things like our Air Force, our military jets, and things of that nature. They're not going to go to Russia because we're going to squeeze those countries to come to the USA. And that's what you're seeing here. And it's affecting the market and your investments. And that's why if it was a regular market, I don't think you would see these swings up that you're seeing presently happening right now. It's such a weird scenario happening because everything that deals with our economy and the state of our economy is not in good shape. So it's very wishy-washy on where we're going and how the market is. And again, the market is not the economy, but the economy affects the market. Uh, and they really need to finish this war, and I don't think they're going to. I think it's going to go on for a little while, and it's going to affect how things come out until Iran gives up the nuclear weapon, supposedly. But who
Yeah.
knows where that's going to end
I,
up.
Bob, I don't think it's about nuclear weapons. I think it's about exactly what you're talking about.
Right.
I think it is about shifting, if you go back to the late 70s, 80s and the shift of into the 90s, manufacturing from us to China, I had clients who were in the rug business in the Carolinas, and once China came in and undercut them, they were unemployed in a
Hmm.
heartbeat. And I
Hmm.
think, and we have gone through this um, period of time. I was talking with my brother-in-law. He's like, I am the last manufacturer of pumps and valves in the United States. It's now all in China. And he goes, and I'm the highest priced. And so he's, competing on quality and service. Um, I think what Trump's doing is to shift that, and nobody else has made that effort since the shift from everything leaving the United States. Nobody has made that effort to bring it back here. And I think it's a ballsy move because it's ugly and nobody
Yeah.
likes ugly, right?
Yeah.
And so, but to make major change, sometimes you just got to get ugly. You know, I think unfortunately it's not a quick fix either. It's going to take time. And so I think you're right. I think it's a good point. Yeah. Anybody else want to chime in on this? Go ahead, Bill.
Different subject, if I might. Friday at the 4 o'clock get together, I made a notation about the stock IC, beg your pardon, yeah, ICHR, I believe it was. It went up 18%.
Yeah.
And so I was listed at 50% in Kerry's stock arrangements. And
Uh-huh.
then after the day, it was 35. And today it's not there at all. Can you explain the procedure here, please?
On his tell sheet,
Yes.
unfortunately, I've been trying to figure out my dad for about 56 years now. And I don't know exactly why he did that. But I can inquire on it. I didn't know he made that difference. Um, uh, I don't know. So let me dig into it and have him address it. And I'll get you an answer, Bill. So
But just another problem. I still haven't been able to get into
Discord. Um, I'm still don't have an answer for you. I don't. Um, I'll reach out to you today. I'll give you a call and see if we can figure out something different.
thank you.
Uh-huh. But you said ICHR?
CIIFR.
Oh, CI? I didn't catch that last two digits.
FR.
FR. Oh, cipher mining. Um, I don't know why it wouldn't be on there. This is one of the Bitcoin miners to data, conversion to data centers situation. When we look at a chart of it, our RSI is right around 65. It looks like yesterday or Friday, it came up against resistance that's been there since January. We saw that phase a little bit here in December. We're at a bit of a resistance level with cipher mining. So until we see a breakout higher, we may continue to see more of a accumulation in this stock overall. See if I can find a box to draw. There we go. So what we may be seeing here is this little phase here of basically accumulation at this point. So I would anticipate a pullback here. And what you want to see, if this is truly accumulation, we want to see this pull back down below these support levels and then start moving higher. So that would be an extension accumulation phase. So right now, just keep an eye on that. We're just bouncing between support and resistance at this point. All
Thank you.
right. Yep. Julian.
Hello guys, how are you? Just a question, Trent, about the Kerry tell sheet. I was
Yeah.
checking this weekend the tell sheet, but look like it's not up to date, or maybe I don't know if it's the old tell sheet because I was in the website and I couldn't see, the allocation that Kerry used or
Okay.
how he's calculating the price prediction for 2027, 2028.
Okay. Seems like there's some discrepancies in the tell sheet, so I'll have to call him and find out exactly what's going on there.
Yeah, because
Um,
we have like a different worksheet without name, like a sheet one, sheet two, three, four, and some of the numbers are like it's not up to date. I think they are in blank.
okay. Um, all right. Let me look into that and get you an answer.
That's so
Yeah,
you
Um,
can
thank you.
fill in your own number.
yep. Oh, you guys didn't
Figure it
receive your
out.
crayons?
You have to figure it out.
Yeah, we sent out crayons to everybody. They can write in their, color of their own
No,
color.
at some point I was thinking that he was using, the PE radio and earning per share to calculate the
Yeah,
price prediction because that's
yeah,
one of the way that we can do it. But he answered by Discord that he placed the number that the Samantha was telling him on that spreadsheet. It's not something technical or maybe with a formula. But I
okay.
was digging on that to try to have a better understand.
Yeah,
I would say to you, those numbers missing is probably a formula situation.
yeah. Are you looking, here, let me share this with you just so I know what y'all are looking at. So when you go to the website,
Yeah, I was to Kerry tell sheet
if you go to
there.
this one,
Yeah,
okay, all right.
and there you have like you have sheet one, six, two, and I don't know which one is the right one.
Oh, it's one is the right one.
Okay, and if you go to the right, right, um, I want to see the allocation, but it seemed like but look like it's that you have share 35, 100 in the column AV. There is like you have some in zero. But I was maybe it's up to date. I don't know, but
Yeah. If he has zero, it's because he sold out of it.
okay,
Yeah, that's how I would interpret it. I'll clarify that. I'll verify that with him. Um,
okay, and
but
mhm.
go ahead.
And the price prediction in January 2027, 2028. He named by Discord channel that he was using, a prompt with the AI to know the number, and I asked him for the prompt to have a because I'm using Copilot,
Yeah,
I'm paying the membership,
yeah,
and
yeah,
sometimes I like to to research and read about the companies, and I would
yeah.
like to have the Kerry's prompt if it's that possible, of course.
He's, that's intellectual property. That's, he's not going to share that. I
Okay,
mean, to
okay,
be straight with you, that would, be like Coca-Cola giving away its Coke formula.
okay,
Yeah,
cool.
and he's, I mean, that's how I look at it. So that's how he, that's why it is intellectual property. He's very protective of that. But yeah, so I'll double check on those zeros in his portfolio area and just get confirmation that he no longer owns shares of that. And I'll post it up on the Discord as well.
Okay, cool. And
Cool.
Trent,
Yeah.
one more question. Maybe, well, maybe it's a Curry. It's a question for Curry, but
Yeah.
I know you know that, of course.
Sure.
If you are building a portfolio, right, which is the best allocation uh, that you can do with maybe defensive sector like maybe I don't know Nvidia or for example Hive that we were looking that stock on Friday in the Kerry Friday call
Yeah.
like was a penny stock. So which is your thought about when you have to build a new portfolio for long-term investment, like 12 months?
Well, for me personally, I look at it from a economic phase conditions. You know,
Okay.
I want to know where we're at right now. I think this month we're in more of a what I call a phase one, which is more of a Goldilocks. You've had a massive pullback in March. Um, but if you look at it from a first quarter standpoint, we're more in a stagflation environment. And so you want to go to companies that are more value oriented. I think that stagflation recessionary phase, so phase three and phase four is going to be what will end up being second quarter. But so when I look at that, I go, okay, if I'm building a long-term portfolio, I want to roll with the wave. I want to roll with the punch. I don't want to get whacked in the face by a 2x4. And so when I look at this environment we're in on a quarterly basis, we're in more of a stagflation, so rising inflation and slowing growth. And so I want to position myself in companies that are going to perform like well in there. And those are oftentimes companies that produce dividends. Okay. They're not big movers. They're not going to, pay for the new Ferrari, but they're going to be steady through this phase. Um, so from a long-term standpoint, I base my decision making on the phases. And right now I think we're in a phase on going from an annual standpoint. We went from a phase one in 22 or bottom of 22 through a phase two, which is bigger extension, cheap money, AI, boom, 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 all the way into the fourth quarter of 25. And then we started topping, and think of it as that chart. We're going up and then we're starting to roll over. And if you look at the S&P, we're starting to roll over. Now we're entering that cost of, the cost of money is expensive. Housing prices are dropping. It's more expensive to live than it was a year ago. And so now we're in that stagflation environment, and we're starting to see the growth element is going to slow in from corporate earnings, in my opinion. So I'm just looking for value oriented companies that pay me a dividend, pay me to wait. And at some point, we're going, maybe in the next year, we'll enter that phase one again and then expansion again. And that's where you start to dollar cost average into more higher risk companies. So like technology is a big, phase one, phase two period. And we've all been trained to look at technology as the leader since the internet boom bust. But there are other places we can make money as well. So is there a simple approach? No, but my foundation is what kind of environment are we in today? In my opinion, this month is great, but it's a month and it's 21 days or 20 days after a big flush in March. But I do think once we get past through this Iran, US, Israel situation, war, the true numbers are going to come out, and that's going to be higher inflation, higher CPI, slowing hiring, which is a big thing. And I think we're going to be in this stagflation recessionary environment for second quarter, third quarter, and we may see some light starting fourth quarter. So I would allocate based on that. Is it Mark, and I know a handful of other people, Mark owns Berkshire. He's a long time holder of that. And that he also, then you think of that as your hub of your wheel. And then he's got his swing trading, and that's the spokes. And that's the satellite portion of his core satellite. So that's how I look at it. Does that help at any?
Oh, thank you.
Yeah, yeah. So
I would look more towards military right now, investing, and industrial. Industrial is basically the first out of a recession that we're actually in. Um, and that's my industry. And I'm telling you that you should be looking there because there's money to be made over the long haul. Um,
Do you see that now, or do you
we
see
had
it
two
more
good
of a
months, as
building?
I told you, we had 2 good months. We're waiting confirmation for this month, the third month.
Mhm.
We need 3 months of strong sales, and this month has softened up. So kind of questionable. We're a little bit past, halfway through the month. Uh,
Mhm.
if we see an increase over last month again, then I would confirm to you that it's it's growing again. We're coming
Okay.
back.
Which is
But
your
until we get
industrial,
that
Bob?
number, it doesn't, it's I'm not there yet.
What were you
Bob, which is
asking?
your industrial?
I sell nuts and bolts and washers, and mainly stainless steel, non-ferrous products.
And what do those products go into typically?
Everything,
Go
Non-state.
see
everything,
Daddy.
everything.
Okay.
Right now,
So
there's a big push on M8 bolts right now that we can't get the material
what
because
is it? What does an M8 bolt go to?
it's a it's a very high strength, which your brother-in-law uses in valves, water
Okay.
plants. There's a big push right now with water plants, refineries,
Hmm.
and these M8 bolts are used in those. We're behind months on
Okay.
getting our fingers onto them, the materials to make them. They're just not, the material's not here. It comes from China. China's playing a game.
Mm-hmm.
So, it's very frustrating. There's a company called Nucor. They are steel manufacturer and they also manufacture bolts, USA bolts. Um, that might be somebody for you to look into. But anyway, it's that it seems to be coming back, but I'm still questioning it until this month confirms that our sales are over last month. Um, the jury's still out, but we're starting to see a positive side.
Okay. Cool. All right. Um, uh, Kanaka.
Hey, hi.
Hey.
Good morning. So, yeah, what Bob spoke about this strategic plan of Trump, I was thinking the same because I did work in China, executed three IT projects as a program manager. They're growing big. They are huge, and their infrastructure is very sophisticated. And we executed almost $900 million IT project.
Wow.
We lot of I was a program manager, traveled from United States to China, and then we had a lot of team travel from US to China. Most of our because we are part of global teams, most of our projects income and revenues for Honeywell is coming from China because
Mhm.
they've grown too big to fail, and they are very strategic. They are growing very strategically with a big plan, and their technology is so. I mean, I'm not talking about the military technology, but the infrastructure and manufacturing technology is huge, and it's tough to. It's very difficult to even compete with them. I mean, because they've grown, we are allowed. America allowed them to grow because of the shifting the manufacturing and so on, all the reasons. But when it comes to now, even for Iran, definitely, to add to the Bob point, and then even we try to we try their funds and their all the capabilities of Iran, but still China is backing up. So they are giving the confidence to still to move so that China can see what is the capabilities of the defense of US, and also this it's somewhat it's also a benefit if US and Iran is fighting. They're just watching, and in fact, they're supporting Iran to continue this war.
Hmm. Yeah.
Yeah.
And
Yeah.
it's very interesting because China gets all their oil from Iran.
Yes.
Majority of their oil comes
Yeah.
from Iran.
Yes. Yes.
And
Yes.
that's Trump's play because
Yes.
that's how he gets China under control to
Absolutely.
negotiate at the table.
Yes, I 100% I agree with you. And see, when we are fighting from the root cause, everything looks ugly. We don't like it. It's so discomfort to our brains. That's how we are in the situations because people are not understanding the strategic plan of Trump, and then everybody are
Exactly.
also unhappy. It's coming down. We are showing the reasons, but that big man, how much effort he is putting to fight this is not small. This is huge. Nobody dared to do this. I mean, as per I know this American history, but I don't know, maybe generations. But as I see that, nobody dared to. But he took that. Um, he's
Initiative.
working hard, initiative, and he's working hard to make this happen. I think we, as an American in the communities, and should support Trump instead of shouting.
This is what change of world order is. And that's
Yes,
what he's doing right
absolutely,
now.
Bob. You got it. You got it. And I'm thinking, yes, I got it. I've been discussing with my husband. Hey, this is what is happening. Oh, you speak something. I don't know. Yeah, maybe I don't know. Because we need to really understand the root cause, and we need to see the how the dimensions are shifting, and
Hmm.
then who is benefiting. It's a strategy, and we need to really put our efforts and analyze and think and see how it is moving, the directions. It's not easy to understand. At the same time, it's not nice to understand because our brains are just wired to understand only nice things and see the nice things, not the ugly things. But ugliness brings in future the nice things.
Yeah.
But some people have trouble stepping outside the box. They
Yes.
listen to too much in the box. You got to step out of the box and you got to look in and see what's happening.
Yeah.
When you understand the plan, then you can focus on what's really happening.
Yeah, my husband, he comes from work every day. He complains, DJ, how much my stock's gone down? You know how unhappy I am? I know.
That's
Every day,
because they're controlling it right now. A lot of people
every
don't
day.
realize that.
First, when he come from work, you know what happened? The shit thing. You know how much I lost? Every day I hear this. My answer is always because I meditate so much to handle all this. So my answer is to him always. So when you are putting efforts, so of course when we are fixing our own house, a small shitty house, so it's so much. It's not easy. It's so discomfort when he's fixing the world economic order. How shit it will be.
Hmm.
Yeah.
So we
There,
need to understand that.
my point of bringing this up is so everybody has some understanding of what Iran and Trump are doing with the market.
Yes,
They're driving the market right now.
Yeah.
absolutely. We he wanted to bring that the the that same how United States was so powerful. So he wanted to bring that. He wanted to make it more powerful, more stronger. That's what he's
Hmm.
trying.
Yeah.
Yeah.
Yeah, one more thing, Trent. We have there is another BTDR stock, which data center came in Ohio. I live in Ohio. In this data center came in Niles. It's just 5-6 miles away from our house. A lot of people are protesting, but still, it's already approved. They are starting to construct.
Okay.
This
So,
is this is from Singapore based. I think they have all over in Europe and different countries. All these data centers.
okay. Well, when I look at it from a charting standpoint, we go back to the October and you go back to a year ago and we saw that accumulation and then move higher
Mm-hmm.
into October, and then it went through a distribution phase, big sell off on November 10th, and 3 days later. And then we went through another distribution phase as well. But now, since February 23rd or so, we've been in that accumulation phase. We basically have been riding the 15 period moving average, which is that white line. We finally broke over that 62. That's my intermediate trend line. That's sort of my line in the sand. And we've made a nice extension to the Tudor Jones 200 here. Let's keep an eye on this RSI because we are in an overbought category. We're down about 3.26% so far today. But let's look for right around $11.30 as a support. And we want to see that support build. That will come up towards that 15, will come up to that level. If we could see support there and the RSI back off a little bit to give us some breathing room, it could make another move through that Tudor Jones 200, which then you start to break through some of these resistance levels. It could be a really nice investment going forward. So look at, like you said, watch the governmental element of data center build out. That's a big part of this. Keep an eye on that. But I think they're coming into earnings on May 18th. So we got some time. We could see a run up and a possible breakthrough that 200. But this is what we want to see, is this accumulation, because this means the big boys are coming in and they're buying and accumulating shares of this. And then, and honestly, they're the ones who are pushing these markets higher. There were a couple others as well. See if I can find them. Let me write them. Let's see here. Write them down real quick. Let's see. There's RB, RK, Zscaler, Snow, and AXON. Okay, let me put those up for y'all. Let's see. RB, RK. That's not it. RB, okay, let me share my screen here. Okay. So this is rubric RBRK. We can see going back a year, accumulation, extension higher into June, accumulation, which had a pop in December 4th, big gap up. Earnings report came in at surprised on the earnings of 158% increase in earnings per share, and then revenue was up 9.26. So that's why you see that big pop. But then the buying concluded and you went through a distribution phase all the way into here into February. And since then, we've been basically going sideways. But a little bit of challenge here on the intermediate trend. So keep that in mind. But possibly we're coming into earnings will come out June 16th, so pretty far out. They had earnings on March 12th. Upside on earnings per share was $1.30 or 136%. But keep in mind, they're still in the negative on that, and they had a 10% increase in revenue. So they're moving in the right direction. But we want to see, why did I do that? We want to see this accumulation continue. We want to see this become accumulation and then a move higher. And that'll give it strength as we go down the road. Let's see, Zscaler. I don't know. Let's see, there we go, ZS. Still in a distribution phase, in my opinion. Been in that since July of last year, and we've just gone down, down, down. We need to see this right here, this April 10th drawdown, the selling conclusion. We want to see that continue to be support and a move higher. So keep an eye on that. It is it's only down 10 basis points today, but we want to see it hold above that 15 and then eventually break above that 62. Then I think we get some blue skies ahead. We'll hit some resistance levels. And remember, back here in December of 24 through April of 25, this is now resistance at 100, just say $185 a share. And you can see that here. So could be an opportunity. Just don't get sucked in. We're still not seeing strong accumulation, in my opinion. Let's see, Snow, SNOW, Snowflake. since the first of the, well, since November through just basically in distribution phase. We're at resistance. Last time it broke down back here in April, 1st of April. You see that basically sideways, and then it broke down on April 9th. We had a conclusion in selling there, big extension in selling, then it's moved up. So we need to see this thing move higher below, towards this intermediate trend line. If we go back here to April, really December of 25, first quarter of 25, this is now resistance. We need to see a break higher there, and we're going to need to see some sizable volume to make this happen. So just honor the fact that it has been on a downtrend, and we need to change that, and we need to see that RSI get above 50, show strength, and we need to see some power, some volume pushing this higher. And for me, that intermediate trend line is essential to get a trend change there. So I'd be cautious there. And then AXON. Similar kind of situation, distribution through the first since August, continuation through March, February, March, and possibly hopefully a stop. But just remember, we saw that here in February, got a pop. And if you're looking at it from a trade standpoint, could be an opportunity move higher to that intermediate trend line right around 171. But if you're looking at it from a standpoint of growth, longer beyond 62 days, a year kind of thing, you want to see this accumulate. I would love to see this, in this case, just go sideways, up, down, up, down, up, down, up, down, sort of like what we see back here in February 26th of 2025 through May. Just accumulate. You want them to buy into this, because then they'll move it higher. But until I see that, I would be very cautious. May get a very short-term pop, so a trade standpoint. But what I see here is your RSI is weakening. You just don't have a lot of the volume. And take into account on Friday, it had basically less than 1 million shares traded. So keep that in mind as well. All right. Hopefully I got a lot of them. Let's Zoom user.
Hey, good morning, Mark. Good morning, Trent and Bob.
Hey.
I had Anthony here. I had a question for Bob, and then a comment for Trent. With Bob, fine job with evaluating. I never thought about it that way, about the war, and you alluded on one stock that you kind of think would do well, Nucor. Do you have other ones? Maybe you could you did a great job, by the way. Probably took you a long time, right?
Well, I can put a list together and send it off to Trent. Trent can distribute my favorite list.
How about Fastenal?
Fastenal is going through some issues right now.
Yeah.
I listened to the last call. It was very so to give you an overview, is our industry has been experiencing pressures, margin pressures, and lack of manufacturing pressures in the last, let's say, 2 years almost now. And we're just starting to see the light change. And what Fastenal has been doing over those 2 years is they've been closing stores, laying people off that operated those stores, cutting inventory back. Each one of those stores has like 2 or 3 vehicles that they have been turning back and selling off their vehicles. So they've been doing a lot of restructuring over the last several years in their business. Along with that, when they were closing those stores, they were losing customers, contractors, people that would show up at their store to buy fasteners. Well, that's coming to roost on them now, and it never affected their margins because as they got rid of this overhead, it kept their margins high. And it's sort of like it's like a game that corporates that have grown over the last 10, 15 years, as they start to restructure the company, they start to get rid of all these costs, which then lowers your overhead, and then you're able to show bottom line profits, right? So what's happening with them? They finally hit rock bottom. So now it's finally hit their margins. Their margins were 20% down, okay? Because they have nothing else to take away, right? There's nowhere else to cut except if they start cutting more heads in corporate. And that seems to be what's going to start to happen. They're afraid of Q2 because they have some reorganization, additional reorganization to do. And I right now I'd wait for Fastenal. Can you bring up Fastenal's chart, Trent? I would wait for
Yeah.
Fastenal to um go a little bit lower. But I can
Okay.
give you my list, and that basically gives you some insight. Um, Companies like mine have done a lot of restructuring and changing over the last couple of years. So there is no getting any lower. It's only
Yeah.
up for us at this point.
So this is new core that you mentioned. Just really a nice accumulation, move higher. And it looks
Hmm.
like we just exited that
How about
accumulation.
valuation on your core?
Sir?
I'm sorry to interrupt. I, I,
No.
I, I, I meant, how about valuation at this point on your core? Where is that at?
Like PE ratios and stuff.
Yes.
Let me see here. Price to earnings trailing 12 months is 25.46. Earnings per share 7.54. Um, pays a 1.14% dividend right now. So, is that I'm not familiar with the what is it? Industrial average PE ratio. Bob, do you have a
So this PE ratio is a little bit high at this point right now. However, with with military buildup and what's happening right now, this stock can go substantially higher because they are a steel manufacturer that is USA made, and that's the demand for military. There
yeah.
must be material that's made in the US. Now, to give you more understanding of made in the US, right? So I could take a bolt. I can take this screw, right? And under the laws, I can take this screw, even though this was made in Taiwan. I can take this screw and I can rework, secondary work this screw, make it smaller, change the characteristics, put a dog point on it. And this screw, then I can claim that it was made in the USA.
Hmm.
Okay. So, and that falls under the laws. Um, but a true manufacturer of material, and a lot of manufacturers, when they bring when they when they manufacture fasteners or other products, they bring the material from China or other countries, the raw material, and then they make it here. And again, that's USA made. Nucor does not do that. Nucor is all American made product. They're a very good, strong company, and they're a good company to invest in. Now, is this the spot to invest in it? I don't know what that answer is. That's something
Yeah.
you have to review.
I
But they structurally they're very good company, and a lot of their products are going to be required. With all this building, you're going to need a lot of steel, and U.S. requires U.S. made steel. Period.
interesting. Um, so this is Fastenal. company. It's above the Tudor Jones 200. It looks like it's basically just in a accumulation potential phase. So right there kind of thing. So we could be seeing a possible opportunity, but we definitely want to stay above that 200 because that's been a nice move higher.
I'm going to go out on a limb and tell you it's going to fall below that 200.
Okay. So then that would be a distribution phase of, because, well, if you actually look back here, this was distribution here. This has been the failure point right around $50 a share. And
opened with me.
Possibly see a pullback in that. So good observation.
In there?
Yeah.
Okay.
Yeah.
Cool.
All right.
All right. Well, I think we're coming up on the hour. Thank you all. Thank you, Bob. This has been a treat. I love your insight.
Grant, I had a comment for you.
Yeah.
That was my second thing. You mentioned about stock having memories.
Yeah.
Right? And coming back, right? Well, as you're saying that, I'm kind of laughing to myself because in my industry, if you get braces and you don't wear a retainer, the teeth will go back in the position where they were before. So
yes,
everything has memories.
Yeah, I have two daughters, and
Yeah.
the pounding the table. Get update your retainer. That was a lot of money we spent.
That's right. And you know what? They don't think about it because you spent the money. But
right.
if they spent the money, they would be you don't have to tell them where to retainer, right?
That's true.
Yes,
That is true.
they will understand, Trent, what he's saying. He will pay more attention.
Oh yeah. Well,
yes.
Yeah, I've got she'll be 26 in 6 days. And then a 22-year-old. And it's interesting how you step back and you watch them run their lives and you're like, wow, I could take some notes. Because they watched us. I guess we were good teachers on what to do and not to do. So, but yeah.
But sometimes they got to learn on their own.
Oh, absolutely. Yeah.
Yeah, but until they're not in danger, we need to handhold them.
Oh, yeah. I don't think that ever stops in some form or fashion. So
yeah, my mother still, till today, she handholds me.
Yeah.
Thanks, guys.
Yeah.
Thanks.
All right. We'll wrap it up there. Thank you all again. Bob, thank you for contributing. Very helpful. And we will be back here tomorrow. Mark will be back tomorrow as well. Prayers and thoughts for he and his family as they go through a bit of a funeral today, unfortunately, and part of life. But we'll keep them in our thoughts. And we will see you tomorrow. So take care. Live loud.
Thank you guys too thank you guys too for everything, all the contributions, please.
Sure.
Thank you, Willie.
Hey, Willie. I never saw Willie's face before. That's the first time I've seen Willie's face.
I know. I know.
It's a good-looking face,
Bob,
man.
Bob, you can't understand.
What'd you do? You turned the button on or something?
I'm rushing every day. Rushing every day, my brother. Sometimes it's difficult. When I start the Zoom, most of the time I'm taking kids to school. Then I'm rushing to work. So that's the problem,
All right, well, take care of those kids.
Thank you guys for everything you guys do. Yeah.
Thank you, Willie. Y'all take care.
Thank you.
Peace.
Bye-bye.
Yes.